Hey guys, welcome back to the Richard Fernando Investing channel. I've got no clue why lighting is not working today. It is a bit of a gloomy day here in Sydney, a lot of rain, quite cold, middle of winter, but we're going to soldier on with the YouTube channel. First of all, thank you to all the new subscribers, all the old subscribers as well. We hit 300, I didn't think this was going to happen this year, let alone in a couple months, so hats off to you guys. If you haven't subscribed yet, please do. And a huge thanks and a shout out to the friends of the YouTube channel. Yeah, we have a little club we call the Friends of the YouTube channel. Number one being the Dockers, indie band from Sydney. They reached out to me, we talk a lot, and I don't know, they're just legends, so check out their music. I'll leave a link below. They've got like a Peaky Blinders themed song. And a podcast by the name of the A-Bra Podcast. I'll put that in the description as well. Hilarious, not very safe for work, so maybe don't listen to it with your boss or anything, but it's good, interesting historical content and just chats. It's like Joe Rogan but Australian. Alright, but without further ado, really I was looking for some divine intervention. I was having a lot of trouble finding stocks worthy of, or noteworthy enough to talk about, and yeah, I didn't want to feel like I was wasting you guys' time, so I decided to do what I always used to do. I don't know why I departed from this. Looked at upcoming floats on the NASDAQ and looked at recent floats on the NASDAQ and found a couple of stocks that just jumped out at me because, for starters, they just had a lot of news around them that I found interesting. But apart from that, the first company I'm going to talk about, I had watched a very long time and then it just fell off my radar because I didn't think they were ever going to go public. So you're probably wondering why there's a picture of Bill Ackman and there was a whole collage of them because I Google searched it. Well, I moved to this one because it's darker, it doesn't look as annoying on screen, or it doesn't look too annoying from what I can see. But yes, Bill Ackman, I'm talking about Pershing Square's SPAC. I'll give you the ticker symbol real quick. I should have probably prepared the ticker symbol. But why am I looking at PSTHU, but then for some reason when I try and buy it, it's .UN. But it appears to be the same. Pershing Square Tontine Holdings. I could have just butchered that completely. Currently trading around $21 US. It's a SPAC. It's a SPAC, and I'm sorry to be talking about SPACs so much on this channel. If I would have known, I probably wouldn't have mentioned previous SPACs, so I could talk about this one because I've been talking about these a lot, and it's very risky. And I don't want to give the impression that I'm a pure risky type of an investor. I'm not actually. I'm a growth investor, but I wouldn't say that I take over the top risks. And this particular company here is probably the highest order of risk you could really take, apart from just like taking out like a triple leverage product against a commodity or something. This SPAC is interesting, yeah. So for starters, I believe it's the largest amount of capital raised ever for a SPAC. So they've got $4 billion. But here's the kicker, or here's the, I guess, the noteworthy part. It's the fact that Bill Ackman and his fund managing this SPAC and its operation essentially, they are looking to merge and become a minority stakeholder in whatever they try and take over. But they want to be a minority stake with $4 billion to invest in. So that's saying that the minimum size that a company would be, assuming that someone has, say, 51% of the current stocks outstanding under their control, would have to be a company that's worth 8.01 billion. You know what I mean? So pretty impressive just by the grandeur and the size of this thing. So I've been looking at just interviews, trying to work out what he's trying to do, just suss out what his plans are. And essentially he's got a pool of about 150 companies he's looking at. Of course, there were rumors already. Before Microsoft was rumored to be linked with TikTok, you know, with all the dramas happening there, before kind of China came in and squashed that idea. There was a huge rumor that it was actually Bill Ackman's SPAC that was going for it. But again, SPAC world is full of rumors. It's full of BS, let's be honest. So very careful there. But why am I interested and why am I considering taking a very small speculative position, very, very small speculative position, is because it looks like it's going to be a huge company regardless. Looks like they're going for a company with a strong moat. Essentially, watch the interviews actually. I'd rather you watch the interviews directly because he outlines his criteria. Some of it is, you know, having a moat, you know, being a huge company with it's kind of forecastable, smooth cash flow. You know, it doesn't have to be profitable yet, but it can be in the near future. They throw out some companies like Airbnb, whatnot, that to see if that's the kind of thing he's going for. And from my understanding, from listening to him respond to questions, it seems like he's going for that type of a company. So a newer business model, something similar. It seems like a similar ethos in terms of investment to, say, the SoftBank Vision Fund. And of course, that has had mixed reviews. That's had its dramas. But that is definitely the impression that I got from listening to him speak. It sounds like, of course, the whole team is working around the clock to find the perfect partner. But the way he describes it is, I'm looking for a unicorn to want to merge with a unicorn, being their own fund, because of just the sheer amount of money they've been able to collect. So, I mean, again, super risky. Even the reasons I've given you here probably aren't really enough to, make you want to invest. And I'm not trying to. It's not financial advice, of course. And I'm still on the fence myself. So this is one that me and my mates will be talking about for the next, my mates and I will be talking about for a week or two. Just trying to work out if it's worth it, because, again, huge risk, potential huge reward. You never know who they could partner up with. There was people saying it'll be another EV company. It seems like he hasn't closed the door to anything except commodity-related stuff. Things that can't absorb huge macro shocks is what he was trying to say. So commodities, for starters, is a no-no. He wants something, think like your Ubers, your Teslas, your Squares, like that kind of a new age type company is what I understood. I could be wrong though. So me and my closest friends are looking at this, but the problem is there is no specific, news in the pipeline. They could come out tomorrow and say we found the company, or it could be months away, a year away, and that is a long time for a company to remain quite stagnant and trade sideways. So big risk as well. There's nothing worse, especially with SPACs, nothing worse than being stuck in something that starts to seem like it's going stale or is a bit of dead wood, and there won't be enough, in my opinion, there won't be enough price action, to really establish, a floor and kind of, start boosting the price until there is the announcement of some sort of a date, or at least the target company. So you're risking a lot for a little bit of news, but that's one, Pershing Square Tontine Holdings. Check it out. All right, so number two. Number two is a lot more straightforward, but it still carries its significant risks. So everyone knows the whole growth story that is Shopify. Everyone wants to be invested in Shopify right now. It's getting quite expensive for a lot of people. Market cap, $130 billion, 130, Jesus. So naturally, people are looking for the next Shopify. If I do a clickbaity title, I might put that up there. I don't think we believe in clickbait on this channel. But Shopify, huge company, everyone knows it. So what company am I looking at as my second company for the day for the video? It's BigCommerce. What's BigCommerce, you ask? Ticker symbol, Big C, market cap about 6-7 billion, but that could honestly change considerably by the time this is released. It's kind of it's fresh to the market, so it's still kind of looking for its own price. But what is it? So it is essentially Shopify, as in the service that Shopify provides. If you're like me and have tried your hand at e-commerce, for example, then you definitely would have come up searching at some point Shopify versus BigCommerce, or something along those lines, to see what suits you the best, what suits you the most. And that's what BigCommerce does. It's basically the website architecture to help you run your online store. The issue here, though, is that Shopify has, 500,000 stores minimum at this point. They had that not that long ago. And at the same time as announcing that Shopify had 500,000 stores, BigCommerce was announcing that they had 60,000. So there's a big difference in scale. And of course, if you go on YouTube, everyone's talking about making a Shopify store. It's kind of becoming like the Uber of this. I've said that twice in the video, but it's like they're becoming the Uber of this e-commerce type sector, e-commerce hosting type sector, because people automatically would say, let's Uber it. And then for e-commerce, people are automatically defaulting to the word Shopify store, instead of just, personal small business online store. So there is a big difference, of course, in brand name and brand recognition and size. But the valuation of BigCommerce is tiny compared to Shopify. So they're both unprofitable. Looking at BigCommerce, my biggest issue with the company is that there's just not enough information to make a super informed decision. This is the kind of stock I'm looking at for a very small speculative position, potentially, or essentially to try and capitalize from the fact that Shopify has been going gangbusters lately and people are obsessed with this sector. But BigCommerce in particular, they were founded in Australia. They are based out of Austin, Texas. You know, those Australian founders have sold off part of their position. They don't actually run the company anymore. But the new management that came in, I find it very interesting what they're trying to do. So they realized that they can't keep competing and losing market share, trying to be kind of that small business, mum and pop store, corner store, small scale competitor to Shopify, like what Shopify does. You know, try and get everyone off YouTube to make a store. That's what Shopify is good at doing, like all these small businesses. Whereas BigCommerce, their management realized we can't compete on that. We can't compete on all the added services Shopify does, so payments, just all the extras that you can do through Shopify that they get money from. Similar to Square, you know, all these extras that at first you don't think you need, but then it just becomes convenient to use their vertically integrated software. Well, BigCommerce has abstained from that actually. So they have a huge impetus and focus placed on their partners and their friends essentially to hopefully have cross referrals from them. So they won't necessarily be the guys that benefit directly from your payment process, for example, but indirectly they have a partnership with whoever does, and of course, you know, there's a good relationship there supposedly, so they bring each other business. That's how they work. They don't try and do everything. They focus on what they're best at, which is the actual architecture and making the website possible. So huge distinction, potentially does justify a smaller valuation in certain people's opinions because they have less kind of things going on under the umbrella that is the company, the stock. But what I find really interesting is that, this new management came in and they said, you know, we've got to move away from these small businesses. Let's try and open up to medium size and the really large scale type businesses. So there's a decent list of some of those names. Off memory, I think Ben & Jerry's and Sony were one or two of them, but could be wrong. Have a look. There's definitely reason that these companies have decided to go with BigCommerce just for the fact that they are considered a solid player because they keep investing and solely working on this one product, which is the actual website and the catalog management, all that sort of thing. But why do I think you should look at it? Look, I genuinely I'm on the fence. I'm on the fence about this small speculative position, mainly because the only real info is in the prospectus. I had a look at that. I suggest you do as well, but that's pretty much all the info I could find, unfortunately. So it's got general info on the risks that they foresee for the company. It's got information on their growth pattern, which has been accelerating over the previous years. Over the past few years, it's definitely trending upwards. They've got, you know, good belief in terms of that more businesses are going to be moving online, and of course, you know, the period we're going through right now is only going to accelerate that. So check it out for those reasons. Let me know what you think below, and watch out for my next video. It should be an Australian video. We're going to try and alternate between the two, US, Australia, see if we can keep up with the content. But thanks very much for watching. Be sure to subscribe, and cheers.